Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at the Exchange ETF conference. Joining me for this segment, we have Noel Archard, Global Head of ETFs at AllianceBernstein. We're going to discuss why actively managed ETFs offers more flexibility for investors. Noel, it's great to have you with us. Welcome to Trade Talks.
Thanks so much.
Let's talk about your 2023 outlook before we get into actively managed. What are your thoughts on the markets overall, the ETF space?
Well, yeah, markets overall, remain, I think, a little bit confused. We've got some investors that, are concerned about recession. We've got other investors that are concerned about rate hikes and where that's going to go. And obviously, the Fed's trying to balance both of those. It just creates, a bit of volatility and a little bit of uncertainty. The midterm view looks pretty good because whenever you have a pullback like this, you've got some opportunity to buy, to rebalance, to reallocate. Your time horizon's a little bit longer than the growth opportunities could be there when you look at some of the quality metrics. ETFs tend to thrive in periods of volatility. There's a lot of products out there that allow you to take advantage of either a short-term view or a longer-term view, depending on what you need. And I think in the ETF space where we've seen traditionally, going back to the inception 30 years ago, there was a very large equity footprint and investors getting comfortable fine-tuning their portfolio from an equity perspective. Over the last 5 years, that's really matured into thinking about fixed income allocations and how ETFs can pivot and help you allocate your portfolio there.
Tell us why AllianceBernstein entered the market starting with fixed income and muni bonds.
Yeah, well, we wanted to make sure that we were taking some of our best strategies and then making them accessible to a broad audience in a vehicle that clearly is resonating with them. And so we are a global multi-asset firm. We could have gone out with fixed income, equity alternatives. We chose fixed income because there are strategies that existed in our portfolio of products today in the separately managed account space, in the case of our tax-aware muni product. But we also had a bit of a gap in our taxable fixed income lineup in the ultra short, that 1 year, around that 1 year, 3/4 of a year duration perspective. And so for us, it was a natural fit that if we're going to plug a gap or put out a strategy that complements what we already do, that would make sense as our first ETF foray, and that's where we ended up launching 2 fixed income vehicles.
And actively managed, let's talk
actively
about that.
Managed,
that seems to
yeah.
be a key theme here this year, the pickup in active management because the market is so volatile.
Yeah, I think it's a great thing. We've seen the number of ETF managers launching active ETFs has doubled in the last 2 years. So that's a pretty remarkable number for new entrants. And a lot of it's because the SEC did a lot of work over a number of years to make a uniform set of rules. They put out an ETF rule almost 3 years ago, and it's made the marketplace much more accessible. So we see a lot more managers coming into this space. That's great for investors because they're able then to couple the active ETFs with other strategies that they might be using in their portfolio with a little bit more of an attempt at risk return controls or in some cases diversification.
How about AllianceBernstein performance and some updates?
Yeah, it's been great. So we're about 4.5 months since we launched our first 2 products. We've seen about $300 million in the 2 products cumulatively, which is ahead of where we thought we would be 4 months in. So we're happy about that. But I think it just goes back to a volatile market situation and investors that are looking for control. And we have a product that helps shorten up duration and increase yield in our year ticker product, and in our other product, ticker TAFI, which is the tax-aware muni fund. That's all about controlling not only your muni investments, but trying to take a handle on that tax strategy to try and retain as much of what you earn.
And I'm sure this is why it's attractive for advisors because it seems to be much more easier to manage the fixed income portion of portfolios because it is in that ETF wrapper.
It's, you've got a few extra benefits there. You've got, in many cases, some cost benefits to the ETF structure that accrues obviously to the portfolio, which means, performance accrual to the advisor and their clients. You've got flexibility of where they can hold it and the price that they pay in their brokerage trading costs, and then in some cases you've got additional tax efficiency. So all of that makes it a pretty compelling vehicle when advisors think about using ETFs alongside separately managed accounts or other vehicles that they might have for their clients.
All right, Noel, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Miami. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.